The game is changing. In 2025, equity might not be the king anymore. Yield is quietly taking the throne. And so, we will dive into why the smartest capital allocators, billionaire family offices, and sovereign wealth funds are shifting their focus from owning equity to owning yield generating assets, and what that means for your investment strategy. We will cover the macro shift making equity riskier, why cash flow is becoming the new alpha, and how to reposition your portfolio for consistent income and wealth preservation. Now, let's break the myth. Equity, that is owning stock or a slice of a business, used to mean power. It meant growth. It meant access to upside. But in 2025, the game has changed. We are living in a world of high rates, geopolitical fragmentation, slowing global growth, supply chain rebalancing, and AI-driven disruption eliminating margin moat. Owning equity today means higher volatility, more dilution, less real control, and no guaranteed cash flow. And worst of all, many equities are now priced for perfection, even in imperfect times. If you own equity with no cash flow, you don't own a business, you own a bet. Now let's talk yield. That is recurring, contractual, often collateralized income. In 2025, yield is power. And here is why. Predictability in a chaotic world. Markets are turbulent, cash flow calms the storm. When we talk about yield generating assets, think private credit, infrastructural debt, real estate with stable leases, asset-backed lending, things that give you certainty when equity markets are directionless. Liquidity premium is back. In a zero-interest world, yield was scarce, but now yield is everywhere, and investors can demand returns without equity exposure. We are seeing 10 to 14% private credit yield, 8 to 10% from infrastructure income, 12% plus in niche real estate with downside protection. You get alpha without equity risk. You are the lender, not the last in line. Equity holders get paid last. Yield owners, well, they are at the front of the line. In yield, you are the bank. In equity, you are the dreamer. Would you rather lend to the business and collect your check, or own the risk and pray for an exit? Cash flow equals control. Smart capital isn't just seeking upside, it is seeking influence. When you own yield, you set covenant, you control cash movement, you have recourse, you dictate the terms. That is a different level of power. Now let's talk big money. Billionaire family offices aren't blindly chasing unicorn equity anymore. They are looking at private credit, collateralized lending, royalty streams, energy infrastructure, income, data centers, logistics, cold storage REITs, because the game in 2025 is yield over hype. Why? Well, they want income now, not theoretical assets. They are defending against inflation and volatility, and they are planning multi-generational cash flow, not quarterly price swings. Old money doesn't chase exits, it collects payment. So, how can you position yourself like the top 0.01%? Rebalance your portfolio from equity heavy to income heavy. Aim for 40 to 60% yield assets. Only take equity where you have influence or deep edge. Look for private yield outside public markets. Platforms, funds, and syndicates now give access to income producing real estate, private credit deals, asset-backed lending opportunities. Think like a lender, not a gambler. Ask, where is the downside protected? How fast do I get paid? What is my recourse? In a high-rate world, the risk-free rate is back. Yield is power again. In 2025, the winners won't just be the boldest. They will be the smartest stewards of cash flow, because in the end, equity can make you rich, but yield can make you sovereign. If you found this valuable, like, subscribe, and comment below. Are you focusing on yield or still chasing equity? More strategies like this coming soon.